My approach to section B questions is to seek what I call the outlier. There's normally some questions which don't relate to the information given. The benefit I feel of doing those first is I bank some early marks. They're normally much quicker questions. I also therefore bank some time, and I can use that time on the rest of this section B question. I allocate 18 minutes for section B, 1.8 minutes per mark. If I can get one or sometimes even two questions done within a couple of minutes, that leaves me in a much better position to approach the rest of the question. The other benefit is I can also pick up what the other questions are asking for, so when I loop back and read this, I can see what I'm targeting. So this is a sales mix contribution calculation and a sales quantity contribution calculation. So I'm already now thinking there are a couple of methods to do the quantity variance, but there's the one method that can be used for both. So I've now decided by default I will use that method because I can then save myself some time. This seems to refer to the student model, which is probably part of the question. This is also a calculation. Of note, when you're given a little extra narrative like that, it's often that's a standalone question as well. I think that could be one that you could do early, and it may be, from what we've seen, that we leave 1 and 2, those two calculations till last, and this is a priority to do in front, because that might be a bit quicker. Because rather than read through all this information, it looks like there's that bit of information there. The risk of that approach, and the reason I tend not to, is we cannot always expect that that part is actually a full question, and maybe it does refer back. And then this definitely looks like a narrative question, and it even tells us, based on the information above, which of the statements are true. This is an outlier, so I'm going to do this one first. In the following quarter, the market for acoustic guitars increased by 4%, and Jarda Co. held a bigger position in this market. The sales manager said this was due to the promotion of their high-quality production, which attracted new customers. Which is true? First one, promotion of Jarda's high-quality production is a likely cause of their favourable market size variance. So market size is outside of control of an organisation. Market size looks at the external market. An individual company only gets a portion of that, which is called the market share. So 1 is not true. Number 2, the favourable market share variance can be attributed to the actions of the sales manager. That's yes, that follows on from what I just said. So the correct answer is 2. So we've banked those marks, saved ourselves a bit of time. Now I'm going to go back to 16. And I already know that I'm looking for firstly a sales mix and then a sales quantity variance. So on my scratch pad, I'm going to do them together. My approach is to do a little table where I have the mix and the quantity variances side by side, so I can reuse sections rather than retyping them. Let's go through what we're asked. Jarda Co. is a business that produces high quality acoustic guitars. They offer 3 models, student, performer and master, which meet the needs of beginner to professional musicians. It prides itself on the high quality of its workmanship and only uses the best raw materials. The sales manager at Jarda is responsible for marketing and selling all 3 models. The marketing manager is responsible for all aspects of production and quality. And procurement manager is responsible for purchasing raw materials and managing supplier relationships. That's quite nice. We've been given those very specific areas of control for each of those managers, and it may be one of our questions is going to ask us to use some of that. The company operates a just-in-time environment and holds little or no inventory. Budgeted and actual information for the previous quarter are given below. We've got the models of guitar and the budget. We've got the budgeted price, the variable cost, number of units, and then we've got the actuals to the right. Additional information from the cost card above about the use of spruce, which is a type of wood, and the actual results from the previous quarter are as follows. We've got the cost per unit, the actual quantity and the actual spend. The procurement manager has been informed he will not receive a bonus for the quarter. He thinks it's unfair because the cost of spruce increased by 2% due to inflation. So let's do our sales mix and sales contribution variance. Quite often we get this setup where we've got 2 pairs of numbers and they could each be favourable or adverse. I wouldn't do this in the exam, but this is just for the purposes of the video. I use the same terminology, whether I'm talking about materials, labour, sales mix and yield, or mix and quantity variances. Keep it simple. I don't need to change the terminology. as long as I can identify from the narrative part of the question what information I need. For a mixed ratio, I'm comparing actual quantity, actual ratio with actual quantity, standard ratio, and then for quantity, I'm comparing actual quantity, standard ratio with the standard quantity at the standard ratio. Because we're talking a mix and yield or mix and quantity variance, once we've found the difference between each of these, we multiply by the budgeted, not the actual, and we've got the price and the variable costs, so we need to find the difference between each of these to find the contribution for each. Here's my table. The scratch pad is a bit clunky, you have to use spaces because you can't use tabs. Actual quantity, actual ratio is going to be compared to the actual quantity standard ratio. I'll find the difference. I'll multiply by the contribution, which I'll calculate from the budget. Let me highlight that just to make it clear that's the one to use. Then I'll get the variance and then I'll work out if it's adverse. So using our units that are given to us, we've got 516 was for S, 215 for P, 129 here. I always laugh at this calculator. I never know why they don't get rid of the solar panel and just make it appear on the screen straight away. Little bugbear of mine about this system. That totals 860. So our actual quantity sold was 860 and the ratios are given above. Always when I'm doing calculations in the calculator, I'm applying a bit of a sense check. I can see the 5 plus 2 plus 1 is 800, so it feels like I'm in the right ballpark. I haven't accidentally missed a zero out or accidentally pressed the decimal point. Because we're talking a mixed ratio, the actual quantity is the same for both, but now we need to look at the ratio. The ratio from the budget is given here. This is a relatively complex ratio because we've got three numbers we're going to have to add up. What I would therefore do is create an extra line In reality, I wouldn't type these out, I would just calculate that and work out the total. So what that means, in my standard ratio, for every 820 sold, 410 would be S, and I've noticed that's half. 246 would be P, and 164 would be M. Well, I can do the half very quickly, so I'm working out half of this 860, and then I do the 246 divided by 820, multiplied by the 860, is 258. And that's 172. And then I fill all of my table up, but not the favourable adverse aspect. Contribution is the dollars per unit, and we subtract the variable costs, that's 55. I'll come back and do the multiplication because I'll need the calculator for that. And then I'm looking to the left, 490 minus 280 is 210. And 700 minus 380 is 320. So back to my calculator, 86 lots of 55 is 4730. Next line is 43 by 210. Which is 9030, and then finally 43 by 320 is 13760. Because this is a mixed variance, this column, the difference should add to 0. I can see that the 243s total 86, so I'm going to have a combination of favourables and the adverse that means that totals 0. So in this one, the actuals was greater than the standard, and because we're selling, this means we are taking money in, so a higher actuals means that has to be favourable. Looking at the other two, they are both adverse, as I'd expect. So I total my variance column, I add my 2 adverse, subtract my favourable, and I'm left with 18,060 adverse. I move on to the next question, and I've already got a lot of my working already done, because I'm working at the total sales quantity contribution now. Got the same setup where we've got a pair of 2 pairs of numbers and each could be favourable, adverse. The extra column we need here is the standard quantity at the standard ratio, and this time we're going to compare this column to that. We need the difference. The contribution will be the same. Then we need the variance, and whether it's favourable or adverse. This should be a bit quicker because we're given these numbers, the 4, 10. I'm just going to work across and do the difference as I go. So that's a 20 difference. 2, 4, 6 were given in the table. And 1, 6, 4 were given in the table. Unlike this one where the column should total 0, I would not expect the column to total 0 because then there'd be no variance, because we're talking about a yield type variance now. So this time I'm multiplying the contribution of 55 by the variance of 20 is 1100. This time the contribution of 210 by 12 is 2520. And this time the contribution is 320 and the difference is 8, so it's 2560. Are these favourable or adverse? Well, the actuals, we use this column, are greater than the standard. It's true for all of them, and that is what we'd expect because either the yield is greater or the yield is less. So now we total these. I've already got the 2560. So I end up with 6180 favourable. One approach you could take, let's say you'd done the first bit, you're running out of time, you could have just completed the top row and found out it was favourable, and then you can narrow your choices down to a 50-50 choice. It's 61,800. But if your clock is ticking down, you're getting towards the end, you're not going to be able to complete the rest. That's a shortcut method. Do the top row, choose one, then if you can do the others, all well and good, but if the clock runs out, then at least you've got an answer in there that's got a better chance of being correct. Question 18, indicate whether each of the following statements regarding the student model are true or false. The procurement manager correctly asserts that inflation was the only cause of the overspending on spruce, and the production manager used less spruce than expected. Let's look at the procurement manager claim first. Down here we've got information on spruce, and this issue the procurement manager's raised, he's not getting a bonus. Thinks it's unfair because the increase in cost was due to inflation. Given our cost is 285 per metre squared, what we would do is adjust that for inflation compared to the actual spend and see if the claim is correct. The 285 we've increased by inflation is 290.70. That's a planning variance we've just done there. We've adjusted the standard to take into account this 2% inflation. It's not called that, but that's in essence what we've done. And the actual, they spent 39,800 on 133 square meters. 8299. So this is false. They've spent more than expected. Let's look at the production manager. The production manager used less spruce than expected. So they're expected to use 0.28 per unit, and there are 516 units. Expected use 144.38. They actually used 133, so that is less. That claim is correct. And then finally, what's the favourable sales quantity contribution variance? Sales quantity contribution variance. In the following quarter, the flexed budget for contribution was 17,250 higher than the original. Also, a 12,150 adverse sales mix variance resulted from selling a smaller percentage of the master model than planned. The syllabus specifically mentions that we need to understand the relationship between mix and quantity variances and the sales volume variance. And we saw this in the family tree when we looked at that. The sales volume variance branches off into the sales mix and sales quantity variances. Sales quantity variance is the one we need to find. If the contribution in the flexed budget was 17,250 higher, that is our sales volume variance. We're told that we've got a 12,150 adverse variance for the sales mix, and then we're looking for the balancing figure. You can rearrange this, or you can take a more sort of logic approach. If this is favourable and this is adverse, whatever's here must cancel out the adverse and also give us the favourable. So 17,250 plus 12,150 is 29,400. It's already told us it's favourable. You can see from the navigator I've answered all 5 questions. That's the end of this section B question. We'll see you on the next video.